Hey everyone, it's Justin, and I'm a trader at SMB Capital. In this video, I give some feedback to an intern on a trade he made in JP Morgan. In the beginning of the video, we discuss a recent issue this new trader faces, and something every trader faces at some point in their career: overtrading. I share my rules for overtrading and what has worked for me. Throughout the video, you'll hear me give just a few pointers on trend following and trades to hold. You'll hear me share my thoughts on his trade in real time. Enjoy.
This is my playbook I made last week on JP Morgan. The overarching theme of this presentation is that keeping it simple, and a few other things I'll talk about in a sec, is the best response to overtrading. So it's an issue we all face, right? Overtrading is something that I've talked to a lot of traders since starting at S&B, and all face the issue no matter what stage in their career they are, but especially at the start of the trading career, when someone's trying to balance experimentation and not over trading. It's easy to make mistake the two, because it's at this point where people are trying to figure out what they're good at, where their strengths lie, and what setup and trading style suits them. So it's very tough to balance the two, and that's an issue I've been experiencing for the past 2 months since starting here. But after reviewing my first month's trading statistics, I could start to see the trades that best suited me. And sending my daily review to other traders allows me to be held accountable. Even if I'm on demo, even if I'm trading small, say my own personal account, the responsibility is ultimately on me. And every day, if I'm sending my review and I'm holding myself accountable, is one of the best ways to combat this issue. And so a few weeks ago, so after I did my April review, I realized that there was a few trades that I shouldn't have made, that they were not experimental trades. They were trades that I knew I should have been making, and then I framed them as experimental trades, and that I was testing out the strategy. But I knew that this was not the way forward if I was to really progress in my trading. So I devised like a 4-step plan to combat this, and I'm currently undergoing this. So step one is to know the exact variables of my A+ setups. So this trade I made on JP Morgan, which I'll get into in a second, is not a crazy, setup. It's one that many viewers watching this will probably know of already. But it's knowing what makes a great setup, an A+ setup, from just the normal average setup, is what will really make it easier to combat over trading. If I'm able to see, right, if I'm able to distinguish between a good trade and a bad trade, it'll make it easier not to overtrade. And step two, take note of how I'm feeling at times when I'm overtrading. What has caused me to make this trade. Because typically it might be revenge trading, I might be tired from the night before. There's a multitude of factors. And then step three, I want to use slower market conditions, times when it's easy to overtrade and to get chopped up, to instead work on enhancing my coding skills, or depending on how I'm feeling, a walk might be a better option. Regardless though, and depending on how I'm feeling, I must divert my energy. I'm diverting my energy somewhere else and away from trading, specifically. And then step four, and I talked about this already, like properly structuring experimentation. Instead of going into the day and saying I'll trade any type of setup just to see how it plays out, it's better going today with a plan on exactly what type of trades you're going to be making that day, or plan on making.
A lot going on that previous slide, and I like all of it. And I think we should just take a second to talk about those things a little bit more.
Sure.
I have some feedback on almost all these steps here that I think might help you.
Yeah.
So number one, knowing the exact variables of my A+ setups. I've made hundreds of playbooks, and I have quite a few setups that are A+, but something that I recognized is that no two trades are the same.
Sure.
So a backside trade is a backside trade, and they may have similar variables, but they never quite set up in the exact same way. So I think that is important to keep in mind.
Okay.
Take note of how I'm feeling at times when I'm over trading. That is very key. And the more you're aware of your self-talk and how you're feeling, and you're not ignoring that voice, and you're not ignoring how you're feeling, you're going to get better at, saying to myself, okay, I know exactly what this feeling is that's coming on. I'm going to get up and I'm going to take a walk. I'm going to go get up and work out for a half hour, 45 minutes, and set alerts before I leave the desk. Yeah, so it's really good. I like that a lot.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
Use these slower market conditions to work on enhancing my coding skills, or depending how I'm feeling, take a walk might be the better option. Divert my energy elsewhere. So I love this a lot, and something that a lot of traders that I'm mentoring ask me, or what do you do during the midday? Sometimes do you just stop trading? Do you go do something else? What do you do? I mean, there's just so many things you could do. Lucky for us at SMB, we get a ton of research sent to us. You could read those research reports. You could scan through 200 stocks and look for stocks that are going to be have the potential to break out. Just so many other things that you could do that will pay dividends in your trading. And then step 4, properly structure experimentation. And I think this is a really interesting one. So when you're experimenting with a trade, essentially what you're doing is you have a trade thesis, right?
Yeah.
And then you're looking for patterns intraday that confirm that thesis.
Sure.
And you're executing the trade, right? Just an idea, and something that worked for me when I first started trading, because like you said, everyone overtrades, especially when they're trying to find their niche and trying to become consistent. Trying to find setups for their playbook. Something that worked for me was, and some of the guys that are on this call probably may have heard me say this, is the 3 strikes rule. And that is basically, you have a trade idea, and you give yourself 3 attempts to trade that idea. And like baseball, after the 3rd attempt, you get stopped out. That's 3 strikes. You're out, and you can't trade that ticker again for the rest of the day. Yeah. And I think that is just something that might work well for you.
I absolutely agree. I think that's a great idea, because what I found is that many times where I'm trying to really place a trade, I'm really trying to confirm my buyer's potential in a stock. I'm definitely trading at times it just doesn't make sense, and I really like that 3 strike rule. So the trade strategy itself, like I mentioned, it's very simple, but either through pre-market planning or scan alerts, I look for stocks that are showing a lot of strength in the first half an hour to an hour. I then look to see where the chart is on the daily, to see if it's positioned well for continuation after this morning's strength. What I then look for is, I wait for a pullback, a gradual retracement to VWAP, and a hold of VWAP, and then a quick bounce off for an entry. And so my target is to take off half at 1 standard deviation away from VWAP, just to take some risk off the table. And depending on the strength here, I might look to add more or potentially add to my position. And it all depends at the moment, if buyers are really stepping off, if the market supports that move higher. But I'm always looking for a reason to sell. I'm always looking for a change in trend. And so my initial stop will be below VWAP. And then the VWAP standard deviation bands act as a dynamic trailing stop of sorts. If the stock continues pushing higher and say in the afternoon it pulls below VWAP or pulls below the +1 standard deviation band, then I'll take the rest off.
So your stop, my initial stop will be below VWAP, just below the price or below the low of the candle below VWAP. Where exactly?
Yeah, no, that's a great question. It all depends. It all depends on where the market is itself at this point, and if there's any support resistance levels that might correspond where VWAP is. In this case, there isn't. There wasn't like a pre-market resistance or pre-market support that I could use my stop against. Say if it couldn't hold support, for example. But usually, what I'm doing is I'm risking about a quarter to a third of a standard deviation below VWAP. But ultimately, what I'm looking for is that it doesn't spend time below that level, that volume isn't accumulating, below VWAP. I want to see a hold above that level, and then a gradual buying for the rest of the day. So I guess it all depends on where the stock itself is positioned.
Okay, got it. So great, you have some detail there. Awesome. And then either through pre-market planning or scan alerts, I look for stocks that are showing a lot of strength in the first hour. I think that's a very broad statement, showing a lot of strength in the first hour.
Sure.
And I think that you should be a little more clear about that and make a little checklist for what you want to see exactly to show you that the stock is strong.
Absolutely, yeah. I get into that a bit at the end. And exactly what I'm looking for, I guess, in this setup. But no, absolutely agree there.
Great.
Yeah, the statistics. So average daily volume 15 million, right? Our vol in this case was 1. So this is something I found interesting, and my stats, I guess, support this. Is with stocks that have crazy R vol, I don't seem to be doing too well with at the minute. And stocks like this, where it's obviously it has great volume every day. And it's fairly reliable ticker. There's high institutional ownership, which I'll talk more about in a sec. The R vol isn't crazy, so that's something I must bear in mind. And more of a reason to hold the stock longer, given it hasn't some crazy move. But the ATR in this case was 3, so it has a nice range. Short percentage of float, 0.60%. That's not really relevant in this case. The key here is institutional ownership of 73%. And so, given where JPM was positioned on the daily chart, right, the strength show in the first hour, which I'll get into in a sec, and the fact that they held above VWAP is indicative of a move higher. And what I look for in these cases is high institutional ownership, so that these institutions that are looking at these stocks are looking at VWAP, the true average price for the day, for logical entry. And I want to see if VWAP is being held up by these bigger players. And just on Friday itself, there was this constant battle between growth and cyclical stocks, and that seems to be a trend these past few weeks. But on Friday, with the poor jobs report and stuff, a lot of investors poured money back into tech. However, and I'll see in the next slide, XLF, the financial sector ETF, and SPY itself were very strong. We're very strong at these points. So I bear that in mind. And then looking at JP Morgan, right, in comparison to XLF in particular, it doesn't look as overextended, still has some potential for move. And I was kind of eyeing this 161, 69 level as its recent high, as my real target, to get as close as there as possible and potentially break. And so what I'm looking for really in a long-term chart is that it's just positioned nicely and that there's no real overhead resistance. I know here it's approaching the high, but say for example it was for a few weeks prior and it was below that 150 level, I wouldn't have the same conviction that I would intraday, given where it's positioned on the daily. And so trade management itself, right? So this is what I was, and I'll talk a bit more about the strength. What I'm looking for in the morning is if there's any pre-market levels that are some way defined. So we have this 157 and 158.50 level. What I look for is a hold of, say, the support and the 157 in this case, and a breakthrough the pre-market resistance, say 158.50. And then what I look for is it to hold above the +1 standard deviation band and really show some strength for the first, half an hour to an hour. And then what I'm looking for is this pullback to VWAP where we start to see the institutions, in this case, the buyers stepping up. Really what's pivotal for me is that VWAP is sloped, that it's not a flat VWAP. Is that for me is more indicative of a move higher. So what I did was I entered long on the test of the VWAP, risking about a quarter of a standard deviation below. I took off half into this quick bounce. So, and this is something I really have to review, and I'd love to hear your thoughts. In the moment, I was thinking that we would have this big push into the tech, out of cyclicals, and like Qs at the time, right? We're breaking above VWAP and we're actually very strong. And so I took some off the table, took off half at the table, just in fear that we could continue lower. So I really didn't stick to my plan in that case. But at this point, I was half in, and once we reached this +1 standard deviation band, I took off a quarter of my position, and then when we started to show some strength above this 160 level, I added to the position, let it ride for a few hours, and then got stopped out here. So definitely a lot to review in this trade. I found there was a lot of things. I'll look at ideal trade management in a sec, but I think ultimately I wasn't sticking to my plan, and I wasn't keeping it simple like I should have. And so this is just a trade review, just to show more in depth of what I was looking at and the trade management. But the ideal trade management, right? Something I really should have been aware of, I guess in real time. And I know you talked about this, is just being, self-talk during these times and talking with different traders at the firm. I think is the best way for me to, really stay emotionally with a trade. I should have bared in mind that, JP Morgan was very near its all-time high. There was no change in trend, no change at least with volume. There's no change in trend during the day. I had positioned myself well enough at the early hours of the day to hold for a longer move. And, I took off half. I really shouldn't have taken off half into that spike, because if anything, that's showing me that, the buyers, the big bidders that they really do want the stock to continue higher for the day. And especially, the volume at this point, it doesn't show it here, but volume was picking up around here. Just after it spiked off VWAP and buyers taking control. So it's very much an emotional sell in that case. If anything, like I said, it's an opportunity to add as opposed to a reason to sell, because it showed strength and immediately. So the variable checklist, what I'm constantly looking for and what I'm constantly adapting is what are the variables that make for a great setup.
Did you think about at all what's been driving the banks, and did you think about at all JP Morgan's recent earnings report? Did you think at all about the Treasury, the 10-year widening? We're back over 1.6%, which is bullish for banks. The Treasury back over 1.6% means that increases net interest income for the banks, which is very bullish. The 10 years continuing to go up. From JP Morgan's report, revenues from investment banking are back up over 46% year over year. And I think that, you mentioned you sold a little too early. I think that if you do a quick dive into what's driving the banks and why is JP Morgan near all-time highs, why is JP Morgan so strong, if you just compile a quick list of all these bullish catalysts for XLF and JP Morgan, that might give you the conviction to hold the trade higher and say, okay, well, this thing's right at all-time highs. it's acting very strong. The market is very strong. The market's shrugging off this jobs report. That day, that Friday, SPY did trade to new all-time highs in the first 15 minutes, I believe. And I think that maybe, I'm not sure if you were focused on what the SPY was doing and what XLF was doing while you're in the trade, but I think that maybe if you said to yourself, okay, well, the jobs numbers, it was a huge miss, and we totally shrugged that off the open. We spiked down into the jobs numbers low, and the market ripped. And within the first 15 minutes, we're at all-time highs, and I believe there was one small pullback, and the market continued ripping that Friday. What would help is, talking yourself through that and saying, okay, well, clearly the bulls are in control today, and all the shorts that piled into that big jobs number miss, they're getting squeezed. So I think if you took all that into context, you would have done a much better job holding it. But still, a really, really great trade, really nice entry. Just something to think about.
Absolutely. No, I appreciate that, because that's something that I've been trying to work on. I found that, and this is more broadly speaking, but before I started at SMB, I was very much a pure price action, tape trader. And then, something I've been working on is, since being here, is really applying the wider context of things. Like you said, where is the market at this point? How is the market reacting as opposed to what the actual news is? I think what you mentioned about reacting, or looking at how the market reacts to the news, is more important. And that's something that's, what I've really found, talking with different traders in real time. The real benefit is I'm able to talk through things like you said. And because, in the moment when, you're making a trade, there's a lot of different things going on. You might be looking at different charts. And so thinking through, how the job, how SPY and XLF is doing, that's something I've been working on. So I absolutely agree there. So the variable checklist, I mentioned a lot of these already, but important technical levels on the daily charts. Obviously that's something I look for. Intraday technicals supporting it, of course. High institutional ownership, this is a very important one for me. The market sector supporting the move. In this case, Orval wasn't that elevated, relative volume wasn't that elevated, but with stocks like this, I'm not expecting it to have some crazy volume unless there's news. And the stock is showing, great strength in the first half an hour to an hour, staying above that +1 standard deviation line. And I want to see a slope VWAP. That means that there's a lot of volume being done above VWAP, and that, buyers are really looking to take control. And what I'll show now on the tape, you'll see here, JP Morgan, is what I'm looking for at this level, right? At this 158.80 is not some, first of all, I want to see bidders stepping up, but I don't want to see like a crazy spike immediately. Say once it reaches VWAP, that it immediately spikes, because that shows me that, maybe it's not ready to hold this level. It doesn't matter on how far the spike is or how big the spike is, but I want to see there to be gradual buying as opposed to quick buying in this case. And so I'm looking for 150.80 to hold. It's a fairly slow one, so I can speed this up. But what I'm looking for is gradual accumulation above this level, because I'm bearing in mind like the high institutional ownership, and where the market's positioned. I'm not looking for some crazy spike. This is very much a trade to hold versus the move to move, and that's something I've been working on, is really trying to distinguish between the two, because that'll help you position yourself better for the trade. So what we saw here was the 150.80s holding up, 150.80s holding up, and then 159 bidder started to step, and then it's gradual. It's not, I know this is on 2x now, but it's gradual. It's not some crazy move, say to 160, and because for me it's too sharp of a move. I'm looking to hold this for longer, And I think a lot of people who would be buying at VWAP might have taken profits like I would have at that point. And so
could we just watch that again from the move into VWAP to when it shot up? 158.80 dips quickly, dips below 80.
Quickly dips, and then
you enter your long.
I enter my long, and then I'm looking for 159 to a nice break to 159, which we got here. It really showed that 159 was not an important level, and that there were not sellers at this point. So I was happy about that.
So you're at this point, you're about 40 cents in the money seconds later.
Right.
You entered in at VWAP, and there was strong demand at VWAP. People, absolutely. Traders, institutions, whoever, they were waiting for that dip to buy. And as soon as it got there, they bid it right up.
Absolutely, yeah.
And did I hear you say on a couple slides before this that you took some off into this move?
Yeah, so I'm not sure if I have it on this tape, but it's just around this. So this is prior days view up here. I took some off into this move, and like we discussed, it really didn't make sense because, like you mentioned there, it really, like, people were really buying this. Like, there was an immediate respect of the VWAP line, and that's what I'm ultimately looking for. And selling into strength doesn't make sense, given where we are on a more broader context on a like 5-day, 5-minute. We're just about to approach that high. So, and I forgot, in time, this is where talking to myself in real time is essential. It was a trade to hold. This was not a move to move. I was looking to hold this for the rest of the day, so it didn't make sense. But
how much did you sell? I see that you're long there.
So I sold half. I sold half into this move. I think I'm not sure if I got it on this video, but I sold half into this move. And then I let the other half ride, and then I added to the position once we got strength later on in the day. But like you saw yourself, like now it's testing the 159.50. It doesn't have that same respect, the same drive through 159.50 as we did at, say, 159. So I think I really have to be more have a better idea of where exactly I'm looking, or how long I'm looking to hold this trade for, because I got faked out in a sec, because once it didn't break this 159.50, that's when I took half off. So
this is just my opinion.
Sure.
But I think that you're being a little hard on yourself about this sale. Your entry was excellent. You recognized how fast it was bid right back up after it tagged VWAP. And what seems like just a couple minutes later, you are almost 70 cents in the money. I think that you, even though this is a trade to hold, you deserve to pay yourself for that. That is an excellent trade, and you were right. I think that you did take a little bit too much of the position off.
Yeah.
Maybe take 20% off. And then once you take off 20%, you almost have a free trade there. You were very right. The execution was excellent. You were right on the trade. You recognized what was going on the tape. You're 70 cents in the money just a couple minutes later. You deserve to get paid for that. And in doing so and taking 20% off, you also now have a cushion, and the trade becomes a little less stressful, which could make all the difference for a trade to hold.
That's a great point. I think you're right. The issue is I took off too much too soon.
Right. That's the only criticism I have about that.
Okay, I appreciate that. And so, wrapping it up, the trade review and approach to trading in general. So what did I learn from this trade? Knowing the variables of an A+ setup that plays your strengths will make it easier to identify great trades and reduce the urge to overtrade. And creating a book of charts and constantly reviewing these setups is essential. there's only so much trade, most of the work is done after hours or when you're not actually making the trade, because the trading itself should be the easy part. And then, talking with traders in real time ensures accountability and allows you to build, or me to build, a better picture of how the trade might play out. And like you would talk about, Justin, like having that context in mind in real time is the essential bit. Because I had an idea of, where XLF was, the financials, JP Morgan's earnings and such, but I wasn't thinking about that in real time. I was just very much focused on the entries and such, which I guess you have to too, but having that context is essential nonetheless. But ultimately, it's keeping it simple, playing to your strengths and having a very clearly defined plan. These are the best approaches that I found to combat overtrading. And we discussed how we could have done better, but sticking to the initial plan, taking only a fifth as opposed to a half off, and paying myself, that would have made a lot more sense. And this is something I found, instead of using, say, a 1 minute chart all day, especially if it's for a trade to hold, it would probably make more sense for me to use, a 1 minute chart when I'm looking to enter and exit a trade, and maybe a 5 minute when I'm not entering or exiting. I'd be curious to hear your thoughts on that, Justin.
When I'm trading intraday, to my right here, I have a screen with 5 tickers, and each of those tickers has a 1, 5, and a 15-minute chart to go with it. And if I'm in a trade to hold, or something that I do think is a trade to hold, for the execution, it's always done on a 1 minute.
Sure.
But once it starts to work, I'm looking at a 5 minute, a 15 minute, and a 30 minute. And I took a quick look at how JP Morgan traded on this day. And I was looking at the 5 minute.
Yeah.
And I know you talked about getting a little better at trend following. Something that I noticed, and an indicator that I like to use, I know you talked a lot about standard deviation, but I think it's important to incorporate a couple more indicators to use. Okay. Something that I like to use for my swing trades is a 9 and 21 EMA, and I found that those could be very helpful on a 5 minute chart. Especially for trend following once a stock is trending. And something I noticed is that on this day, on the 7th, JP Morgan never closed below the 21 EMA on the 5 minute. There was a point where it dipped into it, dipped below it, but it ended up being a wick once the 5 minute candle closed. And that is very bullish. So I would challenge you to look at a 9 and 21 EMA on a 5 minute. Maybe something there makes sense to you next time you're in a trade to hold.
Absolutely. Thank you. So yeah, that concludes my presentation. Thank you very much for your help on that, Justin. And yeah, that's all.
Just another thought. When you're trading at JP Morgan, we talked about this. I do think it's very important that you have up the SPY and you have up XLF just to get a general idea of what the rest of the banks are doing, and just pay attention to the market, because on this day, JP Morgan was doing an R-vol of 1, which really isn't that elevated. Right now there are probably hundreds and hundreds of stocks with an R-vol of 1. So the way JP Morgan is trading, it's going to be very reliant on how the overall market is trading as well. So it's just something to keep in mind.
Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next, and what you found helpful from this video. From all of us at SMB, train and trade well.